There are two indicators I use every single day when I trade. They're both simple, reliable, and after 5 years in the market, they play a huge role in why I am profitable today. So in this video, I'm going to be breaking down my complete setup, the exact rules that I follow every single day, and how I use these indicators in real live market conditions. I'll also show you some live trades as well, step by step, so you can see it happening with real market data. Now, before we get started, I just need you to understand this. Trading is not a get-rich-quick scheme. And after, like I say, trading for over 5 years, it took me 3 years to become consistently profitable. But once I developed and refined this strategy, it completely changed the way that I trade. And in fact, today alone, I've made $4,000 using these two indicators. So the goal of this video is very, very simple. I want to show you the simple, straightforward system that I rely on every single day when it comes to trading the market. It makes it extremely clear. I'm going to show you firstly the indicators and then how to trade them on the live market. So without further ado, let's get into it. Okay, so the only two indicators I've used for 3 years day trading. So there's two indicators that we're going to be using today, and they both serve very different purposes. Firstly is indicator 1, which is going to mark out the first sign of a reversal. It's going to tell me when I should be looking for trades, just so I know that every time I'm on the market, I'm there to take a trade and not just wasting my time. And it can be used on multiple time frames depending on the strategy. So the strategy that I'm going to show you today can be used on the 1 minute, 3 minute, 5 minute, or 15 minute. These are the four that I've tested mostly, and that is where I found the highest win rate to be. Now, the second indicator gives me an exact entry area. It gives me a stop loss value and a take profit level, and it's been tested for over 1,000 trades. So I'll just put a little clip of all of the backtested data that I have on this strategy here, but it is so powerful, and that is why I'm going to show you guys what these indicators are. Now, the first one is actually the fractals indicator by Rachel T. So this is going to be marking out, all of the breaks of structure and the market structure shifts that we use on a day-to-day basis. So that is a super valuable indicator. And the next one is going to be the fib retracement tool. Now, I get that this isn't an indicator, but it is a very, very powerful tool. And with the levels that we're going to set up, it's going to make the entry completely mechanical. Combining these two indicators together makes my trading extremely simple. I can simply go on, look for the break of structure and mark out my fib levels, and it gives me my entry, stop loss, and my take profit. It makes the strategy entirely mechanical, like I've just said. It works on both forex and futures, so you can use this on MNQ, GBP, JPY, US30, whatever you want, and there's setups forming every single day. So we can go on the chart, select time window whenever you want, London, New York, whichever, and you can trade this setup every day. So let's get onto TradingView, and I'm going to show you exactly how to set up both of these indicators just like mine. Okay, so I'm going to remove the fractals indicator here. You're going to go to the indicators tab at the top, and you're actually going to search in fractals, and it's going to be the top one with 4.1 thousand users by Rachel T. You're going to add this to your favorites, click it once, and it's going to appear in the top left here. From here, you're going to click the settings tab or simply double click, and you're going to be introduced to all of these tick boxes. Now, first, we're going to click the inputs area right here, and we're going to untick all of these areas. So you don't need any of these at all. You simply just need the filtered top fractal and the filtered bottom fractal. So I've got mine as triangles, and I've got them black with 100% opacity, just so you can see very, very clearly when our breaks of structure are happening and when our market reversals are happening. On the chart, that is going to look something like this. So every time we can see a pivot low or a pivot high forming, you can see that the fractal actually prints. So here we can see that this low was taken, so this was a new low. Then when we shifted structure to the upside, here, this fractal was broken, so that is our shift in the opposing direction. So it's a super valuable indicator, but now let me show you the fib settings. So my fib looks something like this. I have 3 levels, and one is an entry area, one is the stop loss area, and one is the take profit area. So you're going to double click your fib tool, and you're going to make your you're going to put all of your data in just like this. So the top left here, we're going to tick this one on, and we're going to put in minus 0.2. We're then going to have the 0.618, which is going to be our entry area. And then we're going to have 1.03, which is going to be our stop loss area. Now, the trend line, you can have this so you can actually see it marked out. I'll actually make mine clearer so you can actually see for the purpose of this video. And I have it on the lowest thickness with the dotted line here. You can make it dotted, whatever you want. Doesn't really matter. Now the levels line I have very thin just to make our entries really refined. Like I say, with lines like this, it's not too helpful. So make it a thin line. Background, I don't have one at all, so tick this off if you want. And then I just have the levels indicator ticked with values rather than values, percentages, all of that stuff. So how does this fib work? So if we are in a long position, our entry is going to be on the 618. It works the same way for both. Our stop loss area is going to be drawn onto the 1.03 line, and our take profit area is going to be drawn to the 0.2 line. So it should look something like this. This is a fixed 1 to 2 risk to reward ratio, and this uses something called deviation. So the 0.2 is a deviation on the actual market structure shift leg, and the 1.03 is a deviation to the opposing side of the stop loss leg, basically. So the market structure left on the opposing side. So it works the exact same way for a short position. We put our entry at the 618. We drag our take profit down to the 0.2 and then our stop loss to the 1.03. So like I say, 1.96 risk to rewards. It varies due to how much you actually stretch it over the leg, but this is what we're going to be using. It makes the strategy entirely mechanical, and now we just need to pair both of these indicators together. Okay, so before we actually get on the chart and I show you some live examples, I'm just going to show you in hindsight how it actually works on the chart. So for example, if we are in a bearish market, so we're seeing lower highs, lower lows, lower high, lower low, lower high, lower low, and then we break structure to the upside with a market structure shift leg, we're actually going to be using the fib tool on this leg right here. So usually what you'll see with the fractals indicator is you'll have a fractal here, you'll have a fractal here, a fractal here, and then you'll also have fractals on the highs as well. And now in a bearish context, so when the market is moving to the downside, we are looking for a shift to the upside. So in this sense, we want to see a break of the last fractal high. So if we have a shift here, we have broken above this fractal. So this is the earliest sign that the market is going to change direction. So we have a break of structure here, we broke below this fractal, made a new low, and then shifted to the upside, changing the state of delivery. So we're going from a bearish context to now a bullish context. Now, with that being said, this is where we simply draw our fib leg from the low fractal here, that was the last break of structure, to the high fractal that caused the market structure shift. So I'll draw it to this peak high right here. And what you're going to see is you have your entry area when we retrace. So I'd mark my long position on the 618. I'd pull my stop loss down to the lows, and then simply put my take profit to the highs. So however many pips you actually make here depends on a few things: the pip range, the distance of the market structure shift leg, how much volume we have within the market. There is a few things that vary, but I'm going to show you this when we get onto the actual chart. So this is basically how the setup works. It is extremely mechanical, and the only thing we have to do is be able to notice when the market shifts structure. So we have that market structure shift, but that is why we use the fractals indicator. So I'm going to show you a few trades. Like I say, this works on futures and forex. I'm going to show you some examples on GBP, JPY, and then I'm going to show you some on NQ as well. So here is a few examples, and as you can see, I have loads of data. These are all trades that we've showed in the community, and so I'm going to show you through and walk you through all of the confluences. So this trade right here was actually a long form trade. So this was actually taken from the 15-minute time frame. Now what you can see here is, I'll use the highlight tool so you can see, the last fractal which caused a break of structure to the downside was here. So that is our area of structure. Once we sweep above that from our bearish context, I can tell that we are going to be bullish. So we pushed down, we had our last break of structure right here. This was our protected low and our protected high. We then had a shift to the upside, forming a new fractal. So as you can see here, I'll show you again with the fib. From the lowest fractal, which is here, I've drawn my fib leg from here, and in a bullish context where we are looking for buys, we draw it from the low to the high, which is this fractal right here. This was the last fractal which caused the market structure shift before a retracement. And then I can simply drag that across. Now, as you can see, the top of my fib here lines up with this fractal. And as you can see, price retraced down, tapped the 618. I drew my level here, so my stop loss was on the 1.03. My entry was on the 618 and my take profit was on the minus 0.2. And take profit got absolutely smashed with very little drawdown. Again, we had an entry within here on the lower time frame though. So as you can see, we were in a bullish context, higher high, higher low, higher high, higher high, higher low, higher high. This was our last fractal. So in the bullish context, that was our lowest protected low, and this was our highest. And what happened? We actually broke below this fractal. So this here was our new low. So what did I do? I drew my fib from the high to the low, waited for price to retrace into the 618 area, took my entry with a stop loss at the 1.03, entry at the minus 0.2, and it absolutely smashed take profit. Again, we have another entry here, very, very similar. We were in an uptrending market here, so as you can see, we've got higher highs, higher lows. And again, our last low was here. This was our protected low on the 5-minute time frame. We then broke below, making a new low. So the market had changed sentiment and pushed to the downside. So we were now in a lower time frame, bearish context. So again, I've drawn my fib from the highest fractal here, all the way down to the lowest fractal, which you can see here. And we've retraced back up to the 618. We've entered the trade, zero drawdown, and we've hit the take profit area. And this goes on and on and on. So I'll just show you a few more trades really quick. Again, trending to the upside, we had our break of structure to the upside here. So that was our last high. We broke to the upside, shifted down our last protected low because this leg right here caused the last break of structure. So that is our last impulse leg to the upside. So the bottom of this leg is our impulse leg. That is our fractal low. We then broke below it. So again, I'll just show you me drawing this fib now so you can see. I drew my fib from the top fractal here to the new lowest fractal, which is right here. Draw the leg right there with my stop loss at 1.03 and my take profit at minus 0.2. Entry of the 618, a little bit of drawdown here, but still absolutely smashed take profit. Again, shift to the upside. Nice market structure shift with volume. I've drawn my fib from the lowest fractal formed here to the highest fractal, which was here. As you can see, it lines up exactly the same. We waited for a retracement into the 618 area, stop loss at the 1.03, take profit at the minus 0.2, absolutely smashed take profit. This works for both buys and sells. Again, we were moving to the upside here. I'm just drawing my brush. Moving to the upside. So, higher highs, higher lows, breaks of structure, protected lows, protected highs. We had a protected low, which was here, because this was the last actual break of structure to the upside before we started consolidating here, making some low resting liquidity. We shifted to the downside with momentum. So that was our new lowest fractal. So I can now draw my fib from this high to this fractal low right here. And again, we retraced into the 618 here, had a little bit of mess about around entry, but then smashed take profit. And I could show you trade after trade after trade of this strategy playing out because it is so advanced. So as you can see here, this was a buy to sell flip, like it is that advanced. We had our market structure shift here. I'll just show you. Downtrending market, this was our protected low here and our protected high. This was the last high before the break of structure down. We then swept above, made a new high, but with this context, I actually used the full leg. So I drew it from the full leg to the upside. We retraced back down into the 618 area here, stop loss at the 1.03, take profit at the 0.2, smash take profit. And then we just thought, you know what, we've had a shift to the downside. This was our last protected low here. We made a new low. So then we drew our fib again from the low, at the high to the low for a selling context, and we entered off the 618 and smashed take profit. And then another example right here. This was another higher time frame context. Shift to the upside, we were moving downwards, shift up, broke our protected low using the fractal, retracement into the 618, stop loss at the 1.03, take profit at the 0.2, absolutely smashed take profit. It takes a little while with this entry, but we did eventually hit take profit. These are fixed R trades. So rather than you discretionally trying to find your take profit areas, your resting liquidity, previous daily highs and lows, you simply use this and it makes it a completely mechanical, fixed 1 to 2 setup. Really, really advanced. And like I say, I could show you multiple days, weeks, months, years of data using this exact strategy. But it is a really, really advanced setup, and I recommend that you definitely use this on a day-to-day basis. So these are the 2 indicators that I use that have made me consistently profitable over the space of 3 years. Now, if you guys want more information about the strategy that we actually trade, make sure to check out the free Discord, which is linked in the description. We share our analysis, we do pre-market live sessions where you guys can ask us questions, share your analysis, and also just communicate with the whole team so that you can better yourself within the trading space. I hope you guys have seen some value within this video. Like I say, it is super simple of a setup. I use this every single day, and so do my students as well. So if you did enjoy the video, please make sure to leave a like. If you have any questions at all, make sure to leave a comment on the bottom of this video, and I'll be sure to reply to every single comment. Again, make sure to subscribe if you did enjoy, and I will see you in the next video. Peace.